All right, thanks for joining us. I'm Rachael Burns with True Worth Financial Planning. I'm a certified financial planner and certified divorce financial analyst. And I'm joined today by a very special guest, Aimee Pfaff, who is a colleague of mine who I bring in to a lot of my client situations for help with healthcare questions. And working with divorcees, I work with a ton of women who are losing their healthcare coverage that they had through their ex, and they have no idea what to expect, how they're going to have coverage, what it's going to cost, what that takes. And so there's a lot of anxiety around healthcare coverage, especially when it comes to divorce. And so Aimee is my go-to insurance expert. She's like I call her my insurance fairy, because she's so knowledgeable and so like delightful to talk to. And she's just fantastic. But here's Aimee, and I'll let Aimee kind of explain a little bit about who she is and what she does, and then we'll tackle some common questions that we get.
Hi, everyone. Thank you, Rachel. I really appreciate this opportunity to be able to just provide some basic information to hopefully make the whole process of divorce, which was already scary, a little less scary. So would you like to ask me some questions, or would you just like to kind of have me just jump on in and say what the process is?
Yeah, so would you want to just explain what your role is? Because I think a lot of people don't realize that people like Aimee exist. So if you just explain your role.
That's true. A lot of people don't think to use an agent, and agent assistance is free. I'm a certified covered California agent as well as an independent agent for other lines. But as a certified covered California agent, we are compensated by the carriers. So there is no fee when you work with an agent. So personally, I think everyone should work with an agent because, again, it's free, and we're going to provide a layer of information that you're just not going to get. And because we're licensed, it's different than if you were to call Covered California and talk to a customer service rep. They're not licensed. They're not able to actually give the in-depth information and explain the plans and benefits that a licensed agent can.
That's great. And yeah, there's no cost. There's no reason not to call Aimee. There's no reason. It doesn't cost you to, she doesn't charge you by the minute, which she should. But yeah, like anyone that I talk to who's like, oh, I don't know what's going to happen with my healthcare coverage. I'm on my ex's plan. And, I'm like, just call Aimee, just call her first step. And then, we can sort that out at that point. But maybe it would be helpful to talk through some common questions and some common concerns that you and I both hear from clients, and kind of work through some of those things. So I think one common concern that I hear is like, oh my gosh, when am I going to get kicked off? When is this going to happen? How quickly do I need to find coverage?
So, number one, when you're going through a divorce, you can't be removed from a spouse's coverage. They can't boot you off until the divorce is final. So, yes, time is of the essence to an extent when you're applying for health insurance, but you cannot be kicked off your spouse's plan until the divorce is final. So that's one, situation. But open enrollment. So there are two ways to get coverage through Covered California. There's open enrollment, which typically starts in October and goes through, well, it goes through December 31st. But they do extend it to January 31st. But I tell my clients, don't count on that because they've been shortening that extension period every year for the last almost 10 years. So just think, end of the year, I've got to have all of my insurance dialed in with Covered California. So if you have a qualifying event, which is a divorce, having a child, change in employment, change in income. There's a number of situations that are considered qualifying events that would allow someone to enroll in Covered California. It used to be that you would want to enroll before the 15th of the month, but during COVID, they kind of did away with that. They just said, okay, you can enroll anytime during the month. But I like people to just stick with that, enroll before the 15th of the month. That way, you know for sure that your coverage is going to be effective the first of the following month. So if it's, let's say your divorce is final June 1st, your coverage is ending July 1st, you want to make sure and enroll before June 15th so that you have time to choose a plan, pay for your plan, get your new cards, get all of that information squared away so that you can be covered July 1st. So always think, I want to enroll before the 15th of the month. I want to do it before the end of the year during open enrollment, not rely on that extension period. But yeah, qualifying event and having a finalized divorce, that makes you eligible to participate in the exchange.
That's good to know. And so if someone is just filing for divorce, or maybe they just found out that their spouse wants a divorce, this is not something you need to freak out about right this second. You don't need to worry about, I mean, you're not going to lose coverage until the divorce is finalized, which, like, who knows how long that even takes these days. So it should be something that you're thinking of, but just know that your access or your coverage is not going to get shut off tomorrow just because your ex says it's going to, because they're lying. But it is good to have a conversation with someone like Aimee and like get the ball rolling and get a plan for when your coverage ends.
Well, what I like about your approach with your clients, Rachel, is that you help them plan out, okay, because health costs are a huge part of our monthly expenditures.
Yeah.
And our your retirement planning and all of those other things that we kind of structure for people. So I like when people contact us because, you know, a lot of people will stay in a marriage because they're concerned about benefits. Because they don't know. So if they're in a situation and they're not sure that they want to stay and they're contemplating, well, how is that going to affect my health insurance? Because people stay in jobs for health insurance, people stay in marriages for health insurance. There's a number of reasons why people don't look to the exchange. So I think when they contact you and then ultimately contact me to find out what that looks like, I mean, that's going to help ease a lot of that stress and then help them facilitate maybe that decision that they've been thinking about.
Yeah, it's shocking how often I hear that, and probably you too. Like, I hear people say, I want to get divorced, but I don't know if I can because of the health coverage. And I'm like, oh, that's a crappy reason to stay with someone that you would otherwise not want to be with. But like, sometimes they just assume, oh, if I were to go get my own coverage, it would cost a gazillion dollars a month or whatever. And if you can show them the numbers that, like, look, this is what it's going to cost, totally feasible, like, they're like, oh, I can get divorced. And that's like a really kind of freeing thing. I mean, it's kind of
it's very empowering. Yeah, very empowering.
Absolutely.
So knowledge is power. So when we rely on social media and hearsay and things like that, you know, there's a lot of information out there. There's a lot of misinformation out there. So the best way to get information to help you make important decisions in your life is to talk to an agent. And so then the next thing that people are going to ask is, okay, well, how do I qualify? I want to apply. I'm getting divorced and I want to apply. How does that work? So qualifying for Cover California is based on taxable income. So alimony, child support, things that are not taxable, that could land somebody in a Medi-Cal situation. And I know Medi-Cal, there's some stigma associated with it. And I understand that from days past, but because of the Affordable Care Act, income alone puts people on Medi-Cal. So let's just say $18,000. If an individual makes less than $18,000 of taxable income per year, they're going to be eligible for Medi-Cal. And that's free, completely free. And a lot of times it may not even change your carrier. Like if you're with Kaiser or Anthem Blue Cross or something like that, it may not even change your carrier or your doctor. So that's a conversation that we have, and that might be another webinar, how that works with carriers but so we have to discuss the income. So that's another thing we're going to talk about is, okay, what sources of income, you know, what if you have a part-time job? What if you get a full-time job? What if that job doesn't offer benefits? There's a lot of things that we're going to discuss, but it all comes down to taxable income. And for self-employed people like us, adjusted gross income. So this is the one time that being self-employed, well, I mean, there's lots of other great things about being self-employed, but this
like working in your pajamas.
not have to put on raw makeup every day. But yeah, so adjusted gross income, you get more subsidy. And, the more you contribute to your retirement, the more you reduce your adjusted gross income. So there's lots of ways that I get to talk to people and you get to talk to people. And we kind of work together to help them get that adjusted gross income dialed in so that they actually qualify for the best possible plans, the highest subsidy. And then we go through all of that. But so yes, taxable income, adjusted gross income if you're self-employed, all of that.
Yeah. And I think people don't realize that there is a certain amount of flexibility with your taxable income, especially for self-employed people. Us self-employed people, we can like make or make go away taxable. I mean, legally, of course, but like, I could just make, you have to have the cash flow to be able to make the retirement contributions. But if you need to get your taxable income below a certain amount in order to, get your premiums at a certain level, like you have some control over that. So that's empowering too. Like you have a little bit of more control than you think over the situation.
Mhm.
And back to the taxable income thing. So this is something that there's a lot of confusion about because pre-Trump, alimony used to be taxable income. So
Mhm.
this was, is it 2017 that the tax jobs, whatever that acronym is, went into effect. So if your divorce was finalized before 2017, I think it was, your alimony income is taxable and therefore would have been counted for the purposes of qualifying for the healthcare stuff. But now, if your divorce is finalized after 2017, your alimony is not taxable. So I've run into, and we've worked on clients together where they have income. I mean, they have like a bunch of spousal support or child support, but for the purposes of the healthcare stuff, they have no income. And
Mhm.
I've heard some concerns like, well, I don't want to be on Medicaid. And it seems
Mhm.
kind of strange because they have money coming in, but it's not the right kind of money. And but that's good to know that like Medicaid doesn't mean bottom of the barrel medical care. It's, it does have the stigma attached to it, but it is good to understand like what would that actually look like if I was on Medicaid. And
So
it's good to
in
understand that.
California, it's called Medi-Cal. Every other state is called Medicaid, but in California, it's called Medi-Cal. And there's managed Medi-Cal and there's straight Medi-Cal. So managed Medi-Cal is basically the Affordable Care Act where they said, okay, your income is this, you get to go into managed Medi-Cal. That's where you actually choose a carrier, Health Net, Anthem Blue Cross, or Kaiser. Now people are like, oh, I love Kaiser. I want to stay with Kaiser. I've been with Kaiser now. Okay, there is a little bit of a process, and I won't go into all of that now, but I do explain that to all of my clients. And then as far as taxable income, if somebody's like, I am adamant, I do not want to be on Medi-Cal, I don't care, I'm willing to pay taxes on some of the alimony I get, that's a choice. You can choose to pay taxes on your income. And of course, I always say consult a tax professional, but if you want to pay taxes on your income, you can. And then you cannot be on Medi-Cal.
Really?
If you want to pay tax, if you want to claim your income as taxable, you can give the IRS more money. I mean, you have to do the math.
Yeah.
You have to do the math on it. Okay, well, I still need to live. And, but some people are just adamant about not being on Medi-Cal. Well, if your options are Medi-Cal or not getting a subsidy through Cover California, let's say you're a woman, 55 years old, and you want to be on a gold level plan, that plan could be $1,000 a month without a subsidy or more. So you have to look at, okay, well, what if I pay taxes on $18,000 or $19,000 a year? Well, the tax bracket on that, I mean, so we kind of have to do the math, and that's where you work in concert with the CPA, the financial advisor,
Yeah.
the insurance agent, and everybody kind of works in concert to make sure that that person is getting the best value and the best care for whatever situation they're in.
Yeah. Interesting. And so you mentioned briefly some of the different plans, but if someone has never gone through the exchange to get a policy, what are some of the things that impact, aside from income, what are some of the things that can impact what the costs will be to you? Like, what are some of your different
So
options?
participants in the household, so it's going to be based on zip code, age, and number of people in the household participating in coverage, and income, if I didn't already say that. So zip code, age, income, and number of participants. Those are the four criteria to determine whether or not somebody is eligible for a subsidized plan.
So if you have kids that you're the primary legal,
Yes, you
you know,
do need to
whatever.
claim them. So household for this purposes is claiming them. So
Okay.
there might be 7 people living in your household, but if you're not claiming them all on your taxes, that doesn't count for this purpose. So taxable household.
Okay. So what if you're claiming them on your taxes, but your kids are still included in your ex's health plan? Does that help you with your own premiums?
So it's based on participants. So if they have insurance elsewhere, yes, you are going to get some additional subsidy just based on the household size, but it diminishes a little bit. Because if the other participants are insured elsewhere, it just diminishes a little bit, but not much because it's based on overall household size. So if those dependents live with the the person applying for coverage, even though they're insured elsewhere, we just indicate that on the application, and it impacts the subsidy a little, but yes, overall household size is the primary factor.
And then what about the different types of plans? I'm still confused about that. Like what's the difference between a bronze and a silver and all that?
So there's a bronze level plan. There's actually 2 level bronze plan. There's one that's HSA, so health savings account compatible, which is the one that I always recommend, especially to self-employed people. And then there's the non-health savings account compatible plan. Bronze level plan is more catastrophic, and there actually is a catastrophic level plan too for those 26 and under. Actually, I think it's a little older than that, but I never sell those plans. I think they have $10,000 deductibles, so I don't even talk about those plans. We just go to the bronze plans for people because they're basically the same price. So there's bronze level plan. It's a 60/40 plan after deductible, which is $7,000 deductible. So if somebody is adverse to deductibles, they don't have the ability to fully fund a health savings account, they may not be a good fit for a bronze level plan. It just depends on their lifestyle and their risks and all that. Then there's a silver plan, but to further confuse people, there are 4 levels of the silver plan, and the level of silver plan that you're eligible for is based solely on your income. So there's a silver 70, 73, 87, and 94. I do not sell the 70 and 73 because they have $3,700 and $4,000 deductibles, and they're not health savings account compatible. So that makes no sense to me, but they are 70/30 level plans. And then there's gold level plans. Some carriers like Kaiser have 2 gold level plans, and gold level is 80/20. So $35 office visits, no deductible. The gold and the platinum have no deductible. All silver plans have a deductible. The silver 94 is a $75 deductible plan. It's actually the best plan that you can buy. Seems counterintuitive, but it's actually better than the platinum plan. It has a lower max out of pocket of only $1,000, $75 deductible, $5 copays. It's an awesome plan. And there's ways that people can structure their income. For instance, I have an LLC, we're taxed as an S Corp, and I pay myself as an employee through the company just enough so that I'm eligible for the silver 94 plan. So again, another reason you'd want to talk to an agent about how to structure your income. So there's bronze, silver, gold, and platinum. The level of plan that you're eligible for, you're kind of stuck with unless you have a qualifying event. But people change their situations during the year. So let's say you signed up for the bronze plan, but then you become pregnant. That's an opportunity to change your plan and either be on Medi-Cal or be on a plan. There's lots of different reasons why somebody would be on a bronze, silver, gold, or platinum plan. And we kind of talk about all of those. So I don't know if that answered. I don't know if that
Yeah.
answered the question too much about the metal level plans.
Yeah. So I'm curious, is when it comes to qualifying events where you have the opportunity to make a change, so becoming pregnant is a qualifying event and having a baby is a separate qualifying event?
Yes.
Interesting.
So
It makes sense.
becoming pregnant, oh, sorry, go ahead.
No, 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 go ahead.
So becoming pregnant can make you eligible for Medi-Cal automatically. And then there's a different type of Medi-Cal for maternity. There's actually two different types. So some people opt not to include that information so that they're not stuck into the Medi-Cal situation. So that's another conversation. But yes, becoming pregnant will automatically make somebody eligible for Medi-Cal. And depending on their circumstances, they may or may not want to go that route. But yeah, the sorry about that. So qualifying event is birth, death, marriage, divorce, moving, change in income, and family status. Those are pretty much the only qualifying events.
Moving. So if you does that mean moving out of your zip code?
If you move anywhere, if you move in your zip code, out of your zip code, anytime you move, that's a qualifying event.
Interesting.
So I always tell everybody, hey, 60 days of a qualifying event, make sure you talk to your agent and report that information so that obviously you want to report if you're moving so that you're getting your mail, because even if you report that you want Cover California to email you, they will still mail you mountains of stuff. So, but yes, you want to report any change that you experience within 60 days, especially income. If your income changes, I always tell people more than 10% or less than 10%, it's going to impact potentially the plan that you've chosen. It's going to impact your subsidy and your premium.
So one question that I get is like, when I tell people, it goes off your income, and they're like, well, is it my income while I was married? Does that include my spouse's income, or is that just mine?
That's an excellent question. It's basically your income for the year. So, and then kind of where you are right now. So if somebody goes from being in a household and they're married, filing jointly, it kind of depends on how you're going to file your taxes too, when you apply. So if someone were applying right now in almost March, and they're going to be divorced in June, they would be able to qualify based on their own taxes because they're going to be filing in 2024 or 2023 as single or head of household or whatever. They're no longer going to be filing married jointly. That is something that people want to consider when they are looking at applying for coverage. Do I go ahead and file married jointly? Do I file separately? Do I file single? That's another conversation that we have because it's going to affect their subsidy.
Yeah. And another thing to keep in mind, because I sometimes I have people who are like, well, I'm probably going to be going back to work now that I'm getting divorced, or there's going to be some sort of change with their job. And that's good to know that them change, their income changing is a qualifying event in itself. So they don't need to like predict their income for the year. I mean, if it changes, they can adapt.
Exactly. And that's what I try to tell people. I'm like, look, you're not locked in. If you think you're going to have a lot of changes, if you think, you're going to move or whatever, you're not locked in during open enrollment. If you have a qualifying event or if you anticipate one. So we can do maybe a lower level plan for somebody if initially, and then we can switch them to, or if somebody's going through a lot of tests, or like, I have a lot of tests scheduled. I've got some stuff that I'm concerned about. We can do them on a higher level plan, and then they know they're going to have a qualifying event. We can go ahead and downgrade them once everything is clear. So this is a reason to have an agent that you can call and talk to all the time, whether that's me or somebody else. Just develop a relationship with your agent, with your financial planner, with your tax person, because all of these things are going to be factored in when you're making your healthcare decisions.
Yeah. And if this sounds overwhelming, it's because this is a really giant, complicated thing. And if you feel like, oh, if I just tried to wing it and figure it out myself, and I just go on the Covered California website, which I've been on the website and played around with it, and I'm like, I have no idea what's happening. I'm just going to call Aimee. Like, you don't have to figure it out on your own, and you really shouldn't, because the consequences can be quite big. I mean, there could be a huge difference in the amount of, the type of coverage that you have and the cost. So it really, like, I don't think anyone should try to figure this out alone. And there's no reason not to talk to an agent. It does not cost you, and they're going to help demystify this whole crazy thing. So I really like totally encourage people to seek help from someone
Do
like Aimee.
do we still have time?
Yeah, we have like 5 minutes or so.
Okay, one quick thing. I had a call from my cousin's wife from her former employer this last year, and she had told them to call me about 2 years prior. They own their own business, and so a lot of married people, they may have their own business together or whatever, and they've been told by their payroll processing company, go ahead and go with our group benefits. They're better than anything you can get to the exchange. I've had that same conversation with real estate agents. They've got these brokers who come in and they're, oh, you're not eligible for a subsidy through the exchange. You're a realtor. You make way too much money. So I have two clients. One was a realtor and the other one was a business owner. But the business owner from last year, I saved them $36,000 a year. And I wish I were exaggerating. I'm not. It made me physically ill to know that the payroll, and I'm not going to name the payroll processing company, but the payroll processing company that they were using had them go ahead and go with a plan that their broker sold. And lo and behold, using their adjusted gross income for 2023, which is the year we just enrolled for, they're saving $36,000 a year. And they're getting a better plan. They had a $10,000 deductible. Now they have no deductible and they're saving
Whoa.
$36,000 a year. And
Whoa.
I'm not exaggerating. That's a real case. And then the previous year in 2022, I have a realtor friend that I've known for a while. And she was told by one of those brokers, hey, you make too much as a realtor. You're not eligible to go to the exchange. I'm saving her over $1,000 a month.
Wow.
I
Yeah.
mean, it's crazy. I don't understand it. So I get it. People own their businesses. They know what they know. And I love that. So when I want to go to a financial professional, I don't know what you do. That's why I go to you. That's why you're my financial advisor. But I mean, I don't presume to tell other people how to do their business. I love when they talk to a professional because you just don't know what you don't know, no matter what your industry is. You don't know what you don't know. And I'm not going to call myself an
Absolutely.
expert, but I will say I've been
I'm going
doing
to call
Cover
you an expert.
California.
I don't care.
I've been doing Cover California for almost 10 years. And I do get, when somebody calls into Cover California refers them to me. So I do think I've earned my place in Cover California. And I try to provide as much information to save people money and not make mistakes and avoid those pitfalls at the end of the year when they get their taxes done and they're like, oh, I should have reported my income differently, or I should have done. Yeah, let's help people avoid tax surprises at the end of the year by talking with an agent throughout the year.
Yeah. Yeah, absolutely. If someone wants to find you and talk to you, what's the best way to get a hold of you?
So calling, texting 916-871-2210 is my cell phone. My email is AIMEE at allyouneedinsurance.com, which is all spelled out. So Aimee at allyouneedinsurance.com. Email, text, because I'm usually on the phone. So if you can't get me on the phone, please send me a text. I will get back to you.
Yeah, she's very responsive. Anything else you think people should know?
Use Rachael as your financial advisor. I've been doing this for about 20 years. And honestly, Rachael, 3 financial advisors I've liked and trusted in that entire 20-year period. And mine just retired. And I'm so grateful that I found you. I think you're just wonderful and honest and sincere and so smart. And I'm so excited to be able to connect my clients to you.
Oh, and likewise, I was so delighted when I found you and I was just like, oh, that's just one thing I don't have to worry about anymore. I don't have to worry about anything healthcare related because I have my resource I can loop in for any client issue and I don't have to be an expert in all of those things because that would take me 1,000 years to figure all that stuff out. And you are just like a normal person to talk to and explain things in a way that's easy to understand. And I just feel so confident sending people to chat with you. And so the feeling is mutual for sure.
Thank
I
you
appreciate
so
you.
much. And
Okay.
thanks, everybody.
Thanks.
Bye.
Bye.